Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money and taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. So I wanted to dedicate this episode to a conversation I had recently with a friend who's looking at investing in businesses because she's getting a lot of proposals, getting a lot of pitch decks. And we were kind of talking about what it is we look for if we're going to invest in something, whether it be a business, an opportunity, anything that presents itself where we can invest. These are the things that we have to consider. And I'm going to share them with you because we were unpacking, what do we really focus on? What are the most important things? If we had to make almost a shopping list or a checklist of investment considerations, here is what they would be in this episode. And if you are a business owner seeking capital, if you're seeking investors, then I'm going to shortcut that this is what they're looking for. And you can flip the script on this and say, oh, this is what I have to be ready for. This is what I have to be ready to provide in order for someone to make a good decision about what to invest in. So this is what your investor is probably thinking as well when you're approaching them for capital. So take some notes if you need to, because this is a really important list of what I consider. And I believe a lot of people would agree with me who are investing. So number one, I look at, back up. Number 0, I know how to read financials. Okay. So that alone, I know how to read their pitch deck and I can analyze it and I can look at it, but I'm not going to talk about how to do that. Okay. So there's a whole separate thing of this that is how financially healthy they are, actually looking at their numbers and their projections and asking a ton of questions. I'm not going to go into the details on that necessarily, but you could absolutely book a power session with me and I could show you that. So separately, here's what we're going to talk about when it comes to just somebody who says that they want you to invest. Maybe they don't have financials yet, or maybe they don't have a clear pitch for you yet, and you're having that conversation. These are the things I want you to ask them. Okay. Number 1, how they manage people, what people they have on the team. Who are they assembling as the initial starting force in their company, or who is building this? And that is one of the biggest things that matters is who do you have aligned with you in order to bring this vision to life? Do you have somebody who's on the technical side of things? Because typically, and I'm going to say typically and generally, the person who's talking to you asking you for money is not the brains of the operation in terms of the technical and the practical and the building of the thing. So if they're selling you, say, a software, or they're selling you an investment in real estate, they're not literally the developer and the builder. They're not literally the developer and the builder. Same term in both. But they're not literally the person boots on the ground who's building the software, building the tech, coding everything, laying the brick and mortar. They're not the ones boots on the ground doing the job typically, if they are the entrepreneurial mind who is out pitching. Typically, these skill sets are split among partners or somebody who's really good at the pitching side of things and is really good entrepreneur. I would say typically wouldn't also have the time and energy to be the one to actually go out and build. So very seldom will you see that in the same person. But I would always ask that person, who is the builder? Who is the developer? Who do you have aligned with you that's going to bring this vision to life? Now, the other thing to consider is what makes their experience or their expertise unique. So not only who do you have aligned with you, but what makes them special? What experience do they have in a similar industry? What experience do they have in a similar size company? Or have they created and exited before? Have they built companies like this and sold them? Do they have a track record? Do they have a pedigree that supports the ability of them to perform and the ability of them to take care of my money? Because what you're doing is you're sending out your money as an investor to people to take care of it for you. Because the alternative is you could put it into a savings account, you could put it into the stock market, you could put it into your own pocket, you could reinvest in yourself, you could put it into education, anything. Their goal is to argue to you why your money is better in their hands than all of the other alternatives. And your goal in this conversation is also for you to realize, is my money better in their hands than any other place? So what makes their experience or expertise unique? How are they going to uniquely be positioned to succeed in this market or in this area or with this product or with this service? How are they positioned to succeed? Are they aware of these core strengths? And are they being taken advantage of or exploited? So, are you aware of these strengths that you have? And are you really maximizing on them? So, if your core strengths are, let's just go into the real estate space and say the person's core strength is real knowledge of this one geographic area where they'll be building their properties. Like their core strength is they're friends with everybody in the local governments. They know how to get permits. They've gotten them, at breakneck speed, and that they have the ability to, cut the line, so to speak, there. So, are we able to leverage those things? And are we able to use them in our favor in that company? How are we able to leverage all of that? And now we're going to get into the financials and the numbers a little bit more. How they manage their profits, and do they know the difference between profit and cash flow? That is a big hang up. Now, if you've been listening to this show, you pretty much know the difference, that profit is how much is the difference between the income you're making and the expenses you pay. But cash flow is also the biggest consideration, because cash flow takes into account how are you managing investor capital that's coming in and taking distributions going out. How are we managing the cash flow? And are you going to need another capital raise in order to bring this to fruition? Like, where do I fit into this overall cash plan? And are you going to be able to manage that cash well? Like, what are you doing with the money I'm giving you? That's the biggest thing. Like, where is it going? What is it funding? I had this struggle recently where I was approached by my alma mater to donate to their institution. And I'm sure you've had the same thing, especially right after you graduate. They always hit you up, right? So if you went to let's say a private university, they are constantly hitting you up for donations. And I always think about this and say, God, I would donate so much more money if they let me say specifically where I wanted it to go. And they usually do. And I do donate because of that. But when they're asking for general donations to the school, I go, I can't believe anyone would relinquish control. I care so much about knowing exactly where my money's going, what it's funding, like what it's doing, like what purpose is it serving? How is my money going to work for this company? Because if I were to find out that my money went to watering the lawn, I know that's a necessary expense, but you want to kind of feel connected to some type of purpose. You want to feel like your money is going toward a very specific and significant growth for that company or a significant reason, especially if it's a significant amount of money for you. You want to feel like it's doing a job equivalent to the energy you're putting in. So that's really important, to understand how your money is going to be utilized and how well they're going to manage those profits and cash flows. And you really want to understand, are we using this funding to fund advertising and customer acquisition? Are we using it to do fulfillment, right? Like, where is it going? Is it going to be to fund research and development, to fund marketing, to fund customer acquisition, or to fund customer fulfillment or operations? Like, where is it going to be going in the organization? Also understand, when I invest, do I have any voting rights? Do I have any control, any consultative control? Now, it's super annoying. I know this from both sides of the equation. When investors come in and they contribute capital, everybody has an opinion on how you want to run the company. And you have to be clear to your investors who has what rights to influence in the organization. So there are these things called share classes that you can actually establish. And this is where you get into your tax strategist and your lawyer and all this stuff. But when you're setting up a corporation, let's say for people to invest in, then you can have these different classes of shares essentially. And what you do is you essentially develop what rights and privileges each share class has. So you could say that a certain share class has voting rights. They can vote on key decisions of the company, whether to hire an officer or remove an officer. They could vote on certain significant matters of the company, or like if the company wants to acquire another company or sell off and spin off some function of it, like All of this could go through the voting shares, right? But then there's non-voting shares where like you really don't get a say in anything. We just take your money and we hopefully make money and then you get to leave. And you want to know like where you stand in that. Like where do they see you influencing the company and how will you be involved beyond your investment? Maybe you're a strategic investor and they specifically want you to fund it because you have unique influence in the market they want to expand in. So if you're well known in a certain space or you've already built a company in that space, they may be wanting an investment from you, not just in the form of your finances, but in the form of your time and energy and being able to call you with questions, knowing that you have a vested interest in actually calling them back. So that's a big piece of it. So really what you want to know is where is the money going that you're contributing in, but also overall, where is the money going in the company? How much are the officers getting paid? How much are people taking out? Are we just funding the at-home projects and the lifestyles of these people who are the founders, or how much of it is staying in the business to fund R&D and to fund the growth of the company? What is the plan for the money other than you're going to take out this money and pay yourselves? Like, what are you doing with that money otherwise? And that's a big thing for me is, what are you guys paying yourselves in the early stage? Because you're taking our money, but if y'all are all paying yourselves like $250K a year in salary, okay, there's all the money. What are you doing for the business? How are you reinvesting? So these are all questions you should probably be thinking about. And then finally, are you targeting the right customers? Do you have a really good strategy? Do you have a really good growth plan? Like, what is your projection for this business? Where do you see it going? And what is your time horizon? So having that plan, knowing how you're going to achieve your goals. What are the goals of the company, in the next 1, 2, 3, 5 years, 10 years? What is your time horizon on when you feel like this will be either bringing a product to market or you're going to come to fruition on, developing what it is you have and reaching those goals? And then we get into, finally, the last piece of this is, what are your exit plans? And this is actually probably one of the first questions I typically ask because I want to know what's the time horizon. So if I give you $100,000 today to invest, when am I getting that back? Like when am I getting it back? And hopefully, right? Because it's a risk. Investing is a risk. But every investor, all they really care about is how much do you need? What am I getting and when in return? And we understand that is not a set thing or a set promise, but in our minds, we just have to answer these lingering questions in our head of, okay, so their time horizon is they're going to be spending 3 to 5 years in R&D. They're going to send the product to market in 5 years. And by then they will sell as quickly as they can. Their goal is to sell and exit and make an X multiple on selling the business. And then by then we get paid out our share of that. So if you understand that's the plan, you understand the time horizon, then you can kind of figure out, okay, is this worth investing in? Because if you were to sell it at, a certain multiple of revenue and you see the projections, you can go, okay, so you're going to sell it for X million dollars and I'm going to make say a 20% return. I'm just making up numbers, but like I'm going to make a 20% return in 5 years. Okay. So here's what you have to know this. You have to know what the projected, like give yourself an idea of what return has to make sense for you to say yes. Because if someone said to you, I'm going to give you a 20% return in 5 years, due to the power of A, compounding interest, and B, all of the different opportunities of where you can put your money, think about this. You could do so many other things that could generate a 20% return in less than 5 years. So if someone said to me, put in 100 grand and I'll give you back 120 in 5 years, I'm like, nah, I could probably take that money, invest it in a piece of real estate, flip it and make more money. You have to think about what are the alternatives, the alternative ways you can use your money, and will they outperform that? Because an investment in a company is a risk because you're putting your money in the hands of somebody else and having them run with it and run their business. And if it succeeds, great. And if it doesn't, not much you can do. But if there are other ways that you can reinvest in your own company, or you can invest in real estate or other assets, then they could actually generate cash flow for you that outperforms that return. Not to mention, you'll probably have to wait for an exit event. and wait for the fact that they have to sell, they have to go through all the due diligence. That sales process can take a long ass time, trust me. And it's a lot to consider. I'm not discouraging you from investing, but I am asking you to think long and hard about whether that is a good idea when it comes to your cash flow goals, what your cash flow needs are, and how you choose to decide where your money goes based on your values, your unique priorities. Because you would be surprised how many people are willing to invest in companies due to the excitement of the company, how much you believe in it, how much you love the founder, etc. But none of that's going to matter if they're not generating return. None of that's going to matter if you're not, able to understand how you make money from this transaction, because you're locking up your money for a certain period of time. You got to know how long that's going to be for. You got to know when your money's going to be coming out and roughly what to expect in terms of a return. Or you have to be able to figure out how much could make sense. Like, I would have to make a 3x return in order for me to be happy with this decision and be like a hell yes. You have to assign a value to a hell yes. And if it falls below that, you have to be willing to say the hell no, or willing to demand how the terms will be modified. So, for example, if you give an investment, let's think about Shark Tank. I'll end on this note with, you can always get creative. Depending on what they're willing to offer and how much they need capital, you can think about this. Think about Shark Tank. How many different weird structures of deals do you see going down on those couches? Where you see like the royalty deals, and then you see a percentage of revenue, percentage of profit. You see that they give you a capital, but instead of just ownership of shares, they're offering other types of investment as well, or other types of payout. So for a company that you're investing in, which you expect will not create a product that will sell ongoing, but let's say they're developing an IP that will then sell at the end of this entire, process to build the product, then you're not looking at something where they're going to start selling next year. They're going to be selling this thing like in 5 years. So there's nothing happening between now and then. So versus, say, investing in a company that's generating a product that can go to market, say, next year, now you could actually say, hey, I'll give you this much money in capital, but because I have to wait 1 or 2 years or whatever until or you don't plan on exiting for another 10 to 15 years, I want, between now and then, I want a certain percentage of profit or a certain percentage of sales that go up. And that's reasonable to ask for, because if they're buying your time and your patience in waiting for your money to come back around, then they should be willing to be flexible on certain terms to make sure you're getting the return that you need. So if you're considering investing in companies, these are the things I want you to keep in mind. And I want you to stay focused on what is the healthiest thing for your bottom line and your goals first and foremost, and then not being afraid to express what that looks like for you and basically demanding it. And if you're on the other side of this and you're thinking about investing or thinking about taking on investors and raising capital, these are the things that you want to be ready for. These are the things that you want to be addressing in a very indirect or direct way. You want to be able to say, hey, I know what you're thinking. Where's my money going? Let me explain. When you do your pitch decks, when you do these materials, your PPM, everything, you want to have an idea of that story that you can tell to explain to an investor, hey, here's what's going to happen, and here's how we're going to take care of your money. Here's the unique expertise and experience of our team, and here's how we're going to make sure that you meet your goals. It's really a sales pitch, and you have to be really clear on the criteria of what you're looking for. So I hope you've enjoyed this episode and you find this helpful. As always, if you did find one of our tips helpful today, please share on Instagram at Keep What You Earn. Let us know that you're listening to the show. We just love hearing listeners' questions. We love engaging with you. Let us know that you're listening, and please share the episode and let us know what you learned today. Finding the right support that you need for your business can be so confusing when it comes to accounting and tax. Sometimes it seems like you can't find a CPA or a tax pro who actually understands your business, or they charge way too much for what you actually need. I've seen this for so many entrepreneurs. They're in a bad relationship with their accountant because they don't know what to look for. It is not your fault. So I created a perfect guide for you that is totally free. It's called the Money Pro Matchmaker, and it will teach you what your pro should be doing, questions you can use to interview them to find the right person for you, and a guide to evaluate them so you know you're getting what you pay for. Do not get stuck or screwed with the wrong accountant. Download the guide now at moneypromatchmaker.com. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.